So we're looking at what has been the story around Nigeria's FX market over the last 8 days. Market participants were surprised by last week's central bank's announcement of a new policy targeted to restrain the pacey depreciation of the naira at the parallel market. At the same time, rolling out more than $500,000,000. And we're getting news today that the central bank has rolled out another $100 million to the market to meet outstanding FX requirements in the market. Let's get some sense of this from the global analyst community. Gami Noyane is the head economic research at Ecobank International in London. Good afternoon, and it's good to see you, Gamin. Okay, I guess we lost Gamin there. She's joining us to have a bit of a discussion on what has happened over the last 8 days. The central bank rolled out a new policy after lunchtime on Monday, exactly 8 days ago, and followed that 24 hours with about $500 million at the interbank spot market, as well as for FX. Then we saw the naira gaining rapidly, nearly 11.5% on the US dollar in the week we just finished. And today, traders are telling us at this time that the central bank has sold another $100 million to the market to continue to intervene in the market and make sure there is enough liquidity at the foreign exchange market. On the day, the central bank is also sending about 60 billion naira in open market operations, short-dated treasury bills. Let's get Gamin back on the wire to talk to us a little bit about looking into these developments so far over the last 8 days from Nigeria, sitting in London. Gamin, good afternoon. Yes, if you can hear me in London, Gamin, what do you make of these developments over the last 8 days? Oh, I guess we're trying to get that connection back. But again, at the local markets, as you have heard, it's been a very interesting 1 week. Now we're getting into the second week, and this is the week taking us into the month of March, when the markets and traders and analysts say they're looking at naira further recovery to about 400 naira to the dollar at the street level, looking at sustained confidence following last week's policy announcement or policy adjustments, as it were, the first of such in 2017 and since 2016 June, when the central bank rolled out the new interbank FX market. Let's cross over to the FMDQ interbank FX market and see how that is starting off with Ayodeji Oyeniyi, who is an FX dealer with Rand Merchant Bank. He's joining us via telephone in downtown Lagos. Ayodeji, good afternoon. Welcome to the program.
Good afternoon. Thanks for having me.
Yes, what we have on the news right now is that $100 million has been sold into the market today by the central bank. Talk to us around this latest intervention by the regulator.
So just as a follow-up to what CBN announced earlier last week, was saying and push the clients down. So they offered on Monday 500. On Tuesday last week 500, and on Thursday again, they offered another 300. So today they offered 100 million in the market. And we're yet to see the results of the auction, but at least that's, we need any confidence in the fact that CBN can actually supply market at this level. And the notable movement we've seen from that renewed confidence is what we've seen. We've seen a convergence in the parallel market rate to the interbank market. So we're coming from the highs of the 525 earlier last week to around 430 levels at this point in time, so which is a positive signal.
Yes, 430 is not significant, where they still have about 130 naira thereabout spread between the interbank spot FX and the street level. From your analysis and the rest of your guys, your folks who trade at Rand Merchant Bank and outside your bank as well, do you see this convergence coming much closer? Do you think it's achievable within the new month, March, that we're stepping into by Wednesday?
Yeah, I say it's coming closer, but I don't see it's going maybe past the 400 mark at this point in time. And one thing to note is, even though the interbank market is still at 305 levels, we should know that the retail rate is 20% discount to that, which currently hovers around the 375 mark. So whatever convergence we are looking at is going to be towards the 375 mark, not the 305. So except the CBN decides to move that lower, then we'll see more selling pressure in the parallel market, which would make the rate closer to the 305 mark.
Well, so you're looking at about saying, look like 400 is going to be about the most comfortable level.
Yes.
Okay, at the street level. Thank you very much. Ayodeji Oyeniyi from Rand Merchant Bank. We appreciate weighing in on this conversation today. But let's get back to Gamin. Gamin Noyane is the head of economic research at EcoBank International Group in London. How we have that connection now smooth and good to go. Gamin, good afternoon.
Good afternoon.
Yeah, thank you very much. It's always interesting to sit out there and see what is going on in Nigeria. What have you made up of the last 8 days?
Well, it's been interesting. I mean, it is encouraging and it's welcome news as well that we're seeing some form of devaluation, although it's not on a broader level, which is what investors would appreciate better. But at the same time, it is a welcome news at the moment that we're seeing that the government realizes that there is a problem and it needs to close the gap between the official rate and the parallel exchange rate. And that has caused some kind of narrowing in the spread at the moment to about 145 points, which is good. But there's still a long way to go to close the gap.
So what more would you like to see?
Well, I think it's important that there's broader devaluation of the currency. This policy only seeks to devalue the currency to a particular segment of people. That's people who are using, who are traveling, basically, or who are sending money abroad for school fees. But Nigeria's got various rates in the markets, and there needs to be a broader devaluation for food importers, for pilgrims, for the interbank market. I mean, there needs to be more a broader devaluation rather than having a variation or multiple exchange rates in the economy.
If you're talking about devaluation, about 30 seconds, what figure are you looking at if we're going to do devaluation, or percentage?
Well, I would not expect anything less than a 20% devaluation in order to boost confidence, investor confidence significantly in the Nigerian economy. It is important that the government, the central bank, tries to loosen its grip on the exchange rate at the moment, and that is at the moment constraining a lot in terms of economic activity. But if we see a broader level of devaluation on all aspects of the economy, then I think that will help to boost confidence in a greater way.
Yeah, Gamin Noyane, we thank you very much for winning this very conversation, and we thank you for your insight and context in which you put this for us today. Thank you very much. Do have a great day out of London. Gamin Noyane, head of head of economic research at EcoBank International in London. And that's about all for today on Business Incorporated. I am Bosun Omafai, live from Lagos. I'll see you again.